Hey, it's Dave. Happy holidays to everyone watching. I hope you're able to spend some quality time with your friends, family, and loved ones, and you've had a great end of the year. As the year is starting to wrap up here, I do have a few year-end videos I'm looking at putting out. And today I was just sitting down and thinking for a while about the crazy market we've gone through in 2022 and what lessons I can really take away from this past year as an investor and just as an individual. I do have to say that this has been probably the most challenging year for me in a very long time as an investor, perhaps most challenging year ever. But I am convinced that this is going to make me a much better investor going forward and that I've learned a lot going through this difficult time. This is the most difficult downturn I've gone through in the markets. I wasn't really an investor back in '08. I had maybe a couple mutual funds in my name, but nothing much, nothing like what I'm up to nowadays. Even the COVID crash of a couple years back was not nearly as bad as this. It was quite sharp, but the bounce back was very quick, and then we were off to the races, getting to all-time highs very quickly, and things just kept looking up. So this has been a very tough time for me, and I really just wanted to figure out what I can learn from it, what to take away from it, and share those thoughts with you guys as we close off the year. Let me know how this year has been for you with your investing and what your biggest takeaways have been. So with that out of the way, let's dive into 5 lessons learned in 2022. Okay, so number 1 on my list is that every dollar matters, and that is actually especially in the good times, because just looking back on my portfolio in 2022, I can see where I sowed the seeds for a lot of mistakes that really came to fruition in 2023. So if we look back at how I did, we can see that from January 1st, 2021 to the end of the year, of 2021/2022, we had a return of 42.5%, which is pretty amazing. Really outstanding return. And really, it just felt like there was money all over the place, and I could afford to invest without doing my due diligence, just throw some money at any company that seemed interesting to me, seemed like it had a good idea, had a good concept, without really diving deep into these companies and treating every dollar as precious like I feel they are right now in this bear market. Thinking back on all these ways I spent my money in the market just seems silly right now. So I'll give you some examples. I kind of gave into a bit of FOMO when Coinbase went public and buyed right at the IPO, or I believe it might have been a SPAC. Obviously, Coinbase is way down right now. Zillow as well. I bought in without really doing a ton of research. I just found the concept to be interesting, and I just felt like I had so much money available that, you know, what's $5,000 here and there? So I bought into Zillow. Square was doing extremely well. I bought into Square mostly based on the story. Corsair Gaming, CRISPR, I mean, the list goes on. And luckily, I kind of realized my mistake in that I was buying too many stocks to really understand them all at a very deep level. And I did end up scaling back, but nevertheless, I still got hit on a lot of these ones that I didn't really understand very well, and a lot of big losses came out of them. So really, the good times is when you really have to take care of each dollar the most, because when the market's getting toppy like that, that's where the most risks are, really. So every dollar today feels extremely precious to me. I wish I had more cash to deploy in the market. And back then, I was just treating every dollar like it was nothing. And I was 5,000 here, 5,000 there. I don't even know this company. Let's put 5,000 into it. It was really crazy. So that's definitely one thing I've learned from it. This tough market has really taught me the value of those dollars, especially in the good times, not only the bad times. Next up, so diversification, at least for me, is actually helpful. There's a pretty famous quote that goes, "Diversification is for idiots." I believe that one is Mark Cuban, but we've also had, Warren Buffett and even Charlie Munger say things along those lines, very famous, very smart investors. And maybe for them, diversification is for idiots. If they're really that smart that they never make a mistake, every trade is a winner, they know what the biggest winner will be, then sure, you can go all in on the biggest winner. Personally, I think nobody's perfect. Everyone makes mistakes. I know I make mistakes. So for regular humans like me, diversification really saves you from your mistakes. If you go all in on one company and you're wrong or things just don't pan out, obviously that's devastating. So, having a diverse portfolio has helped me ride through the rough markets of 2022, in spite of what some people do say or feel about diversification. Definitely helps reduce your risk. Looking at my retirement count here, obviously it's still not great because the overall markets have been down quite a lot, but this is significantly better than a lot of the growth stocks I held in some of my other accounts. So it's been pretty comforting to have this still going fairly steady. It's still up on a couple year basis significantly. So even though it's a bad year, it's not as bad as some of those other individual stocks have been. I know some Rocket Lab holders who bought maybe at $10 plus, feeling that kind of pinch as well. And I have stocks where I have those kinds of losses as well. So holding some of these indexes, holding some of these diversified items, I don't think it's for idiots. I think it's for people who know they're not perfect, and I'm definitely not perfect. So very glad I continued to hold those and maintain at least a somewhat diverse portfolio, even though I like to research stocks in depth and really kind of go big on ones that I do think are winners down the line. Number 3, valuation is key. Don't just invest based on the story of the company, which is what I did a few times with those other companies I mentioned previously. So before you buy anything, always know not just what the company does and the story about the company, but what earnings numbers do you think they're going to have next year, next few years? How much money are they going to make? Are they going to turn a profit? How fast are they growing? What are the forward PE numbers based on what you think they're going to make next year? What forward PE do you think is justified for a company growing at the rate that you see them growing at in terms of compound annual growth rate? Also look at their PEG ratio in terms of the price to their earnings growth. That's an interesting metric I always like to take a look at. And just know where the company's future growth is going to come from and project reasonable numbers based on thorough research for those companies. Don't just buy on the story without really looking at the valuations. So an example of this is Square, now named Block. This was a financial transactions company, basically. They do a lot of other things. They help merchants sell goods and services. But yeah, they're kind of a fintech company if you're not familiar with them. I bought back sometime, maybe even 2019, 2020 a little bit, although I did continue to add. But you got to look at the price to earnings ratio. Obviously, it was very exciting when the stock price was going up like crazy. But the price to earnings ratio was hitting almost 400. So you have to ask yourself, which is what I didn't do at the time, what compound annual growth rate do you actually need to justify a PE ratio of almost 400? Do you know? Do you, in your head, and is this company hitting that growth rate to justify this kind of a multiple? I didn't really think about that. All I thought about was this is a growing area. Fintech is big and exciting. The stock keeps going up. But I kind of learned a lot from this, and I did end up selling probably April-ish, as I tried to consolidate my portfolio down into more companies I knew better that I could answer these questions on. This is one I decided to sell just because the space was starting to look a little crowded to me, and I realized these numbers seemed a little bit lofty, and I just didn't know the company as well as I should to really be an investor in it. So I decided to consolidate and sell this one, move it to other companies that I know better. I'm very glad I did, as we have continued to drop down to the $50 level. We now look like we're at a more reasonable price to earnings ratio of $56 per share, although of course this depends on how fast the company's earnings are growing, whether you think that's a good bargain or not. Personally, I'm not an expert in this stock, and I'm going to continue to focus my attentions elsewhere. So I don't really know whether it's a bargain or still expensive at these levels. And I know that I don't know that, so that's why I am not investing in Square right now. By the way, before we go on to number 4, if you're enjoying this video, if you like investing content, please consider hitting that like and subscribe button down below. It'll help out the channel a lot, and I'll greatly appreciate it. Number 4, don't buy the dip too early or deploy all your capital too early. So prior to this year, I hadn't gone through a severe downturn quite like this. So obviously, in my experience in the market, things seemed cheap, even say 4 months ago, and I started buying the dip because things seemed cheap. But I didn't quite realize how deep these downturns can go, how they can drop. Obviously, I know kind of theoretically what happened in '08 or even other market recessions, but going through it is something completely different. And I deployed capital too early. It seemed cheap to me at the time, and now I am mostly fully invested, and I think there's some great deals out there that I can't take advantage of to the degree that I would love to. Now, I know a lot of people out there are guilty of this, even some professionals, some other people I follow, buying the dip all the way down, running out of capital, and now things have dropped even further and seem super cheap. Obviously, I'd love to buy more Rocket Lab in the 3.5s and below. I still think I got a pretty good price in the low to mid 4s, and that in the long run, things are going to be fine. But when you see those great deals, you love to have money for it, and unfortunately, I don't, short of selling some of those, say, index funds, which have really saved me over the past year, and been very comforting in the downturn. So let me know if this is one you're guilty of. Do you still have capital to deploy? Are you waiting for stocks to go even lower? Or what is your cash position at this point in time? Because I know for me, I guess I didn't realize how bad it could get, and this has been a learning experience for me, and I fully admit that I'm not perfect, and definitely something I'm learning from in the future. Keep that dry powder, so if you see extremely attractive deals out there, you do have the money to buy even more. Last one, number 5, is seize a good opportunity when you see it. So one that I didn't even really, a stock that I didn't even know very well at all at the start of 2022 was Rocket Lab. I researched it extremely thoroughly, as I'm sure a lot of you guys know. I went through all these numbers, price to earnings, forward PE, where the future growth is coming from, what valuation I think is reasonable for the company. And to me, it looked like a good opportunity, so I did seize it. I mean, I guess the future will tell us whether that was correct or not. Maybe I am wrong once again, and I'll be making a video in 2023 with a new lesson on this. But right now, I still think that this was a great opportunity, and I continue to keep my eye out for good opportunities. I do like to buy heavy when I see them, so I did buy fairly heavy on Rocket Lab, purchasing 10,000 shares of the stock. So as I take these learnings from 2022 and adjust my portfolio accordingly, I still have a pretty heavy position in Rocket Lab. Still believe in it, still continue to research it thoroughly, and will continue to do that going forward. Obviously, if my ideas on it change, I'll be sure to let you know. But when you do see that great opportunity, if you've done your research and you're convinced it is a great opportunity, I think it's okay to still go heavy and buy it. So the future will show whether that's right or not, but I know I've had times in the past where I thought I saw a good opportunity. I bought a little bit of it, and it turned out to be a great opportunity. If I had put in more, I would have become extremely wealthy, which I didn't, but definitely don't want to make that mistake again. And as I see this opportunity, I am trying to seize it. So that is number 5 for today. Let me know if you've experienced any of these yourself in your portfolio, if there's any other lessons you've learned in 2022. I hope we all have a much better 2023 when it comes to investing in the stock market. At least for me, it can't really be much worse. And I hope you have a great New Year's. I will see you guys all soon. Bye for now.